Daily rates live with the mortgage calculator. We'll wait just a minute here to get started, but we're going to go over asset utilization loans today. So first we'll do some live mortgage rates, and then we'll do a deep dive into asset utilization. But like we do every morning, we'll wait just a minute here to get started. Let us go live on all the different platforms. We put the chat up on the screen. Feel free to drop a comment there. I see some comments coming in. Definitely appreciate it. And we'll get started here in just a moment. Hope everybody had a great weekend. It's Monday, ready to get back to it. And we'll check out the pricing to see what the market's looking like this morning, and we will go from there. So it looks like we're live on all the different platforms, so we will go ahead and get it started. We'll take the chat off the screen for now, but please keep dropping comments there in the chat, and you can also drop any questions that you have there in the chat as well. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our sales manager, Jose Gonzalez. And this is our Daily Rates Live show, where every morning at 11 a.m. Eastern, we go through some live mortgage rates to see what the market is looking like that morning, and then we do a deep dive into a different topic. Today's topic is going to be asset utilization loans. Now, this is a non-QM loan, and at the Mortgage Calculator, we specialize in non-QM loans, so it's definitely something we're very familiar with. So our sales manager, Jose, with 28 years of experience, will take us into a deep dive of asset utilization loans. But before we do that, we will go ahead and look at the rates this morning. So, excuse me, Jose, if you're ready, let's go ahead and pull up the live rates and see what the market is looking like this morning. Let me go ahead and change the screen here, and we will get into it. All right.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Great to be with you today from sunny and warm South Florida. So, like every morning, we're going to pull up our conventional primary rates and investment rates, as well as non QM primary and investment, so we could get a feel of the pulse of the market. Our deep dive today is on asset utilization loans. So I will get into that once we break it down. But that is a very cool concept on using non pledged assets to qualify the borrower. So let's get right into our market today. Our first option here is conforming loans, 80% LTV. Our price is 99, meaning that we have the borrower paying 1 point loan discount to buy down the rate. So let's see what our conforming rates are doing like today. So we have 6.624% with 0.875 is our lowest cost option for our conforming loan. 80% LTV purchase. So let's go now to our here expanded guide. Actually, no, let's do our FHA loan. Excuse me a second. We do not do our USDA and our VA loans live. So you can reach out to one of our mortgage loan consultants at the Mortgage Calculator, and they'll be more than happy to quote you USDA and VA options. So here are FHA for today. Wow, look at that. We're getting some good movement here. Look at the difference also between FHA and conventional. And the main difference in those is going to be the insurance on the FHA, right? It's backed by the US government as opposed to conventional loans are private. So 6%, 0.75 point loan discount. Amazing option. So now let's go with expanded guidelines. That's non QM, right? So here again, we're keeping it, we're going to compare apples to apples. So we're going to go 80% loan to value, full doc, expanded guidelines, meaning non QM. And we're looking at 7.25 is our best option there for our non-QM, full doc. But now let's go where we really love to shine. Let's go with business bank statements. Now, you saw 7.25 was full doc, non-QM, full doc meaning traditional full doc, tax returns, pay stubs, W-2. So now we're going to go for our self-employed borrower and click here, self-employed, 12 months business bank statements. And we're still doing primary residence, 80% LTV. Wow, when you look at that, 7.375. So the rate is pretty much almost what it was. Full doc was 7.25 at 0.875. Bank statements is 7.375 at 1 point. So very little difference. So if you do have that self-employed borrower, do not try to put the square peg through the round hole. If you can get them qualified with bank statements and it looks like it's going to be a real big mission or maybe not even doable, full docs, definitely bank statements is the way to go. So now let's go with some investment property options, right? So let's go back to conventional, conforming, 80% LTV, again, 1 point, and full doc over here. And let's see our conforming options for investment property today. So we have 7.375 at a cost of 3 points, or you have 7.5 at a cost of 2.75. Very similar there for our conforming option investment property. So now, again, for our self-employed borrowers, let's go expanded guidelines and let's check our 12-month business bank statement option. 80% LTV, nothing changes, and there should be a spot here for the prepayment penalty. No. Okay. And we are looking at 7.75. Will you look at that? 2.25. So rate little bit higher than your conforming, but the cost is lower. So you pick the options and see which is best. But here our bank statement option, very competitive when you're comparing it to the full doc conforming option. So let's go full doc expanded guidelines, right? That was our bank statement. Let's compare full doc apples to apples. 7.625, 3.25, again, very similar to the conventional option that was also full doc. Now we're going to go with our favorite option here is our DSCR option for our investor. Same options, 80% LTV, 1 point loan discount is preset at a 3-year prepayment penalty. Okay, let's see here. A minute, I may have said something wrong. Invest. Okay, expanded guidelines, purchase, fixed rate, Miami, Florida, 1 year. Let's maybe having a little system issue here because I know there's definitely 80% DSCR options. That is probably a little bit of a system issue. So we will have to check the DSCR rates tomorrow. But let me go right into the asset utilization program deep dive. So what exactly do we mean by asset utilization? This is a pretty cool program because asset utilization uses the borrower's liquid assets to qualify the borrower. So really depending on the guidelines for the option submitted is how we calculate the income. It's going to be getting the assets, the verifiable assets according to whatever the program allows, and dividing by a number. In some cases, they divide by 60 months, other cases, they divide by 240 months. They may let you use a certain percentage of the assets, and it's going to vary from guidelines to guidelines. So don't assume that all asset utilization loans are created equally. They're not. So you can go as high as 90% LTV on these as well. So let me go ahead and share my first option with you. This is an asset utilization 90% LTV option, which is the maximum LTV allowed. So again, asset utilization does not take into consideration jobs. So it doesn't matter if they're full doc, if they're employed or not. That's the cool thing about this program. It simply uses the assets, and these assets do not have to be pledged, do not have to be put into a segregated account. They just have to have them. They have to have some seasoning on the assets, depending on the guidelines. They could say they got to have them at least 4 months, 6 months. Really depends on the guidelines. You do have to look into that point. They can't just have gotten those assets and now apply tomorrow. So there is a certain amount of seasoning the time that they want on the assets being owned by the borrower. So at the 90% option, never any mortgage insurance either on non-QM, you're looking at 9.375 is our lowest cost option. 8.25% is our lowest rate option, and this is 90% LTV asset utilization. So if they say they have, let's say they have $2 million in stocks, and the system says that you can use 70%, you'd get that 2 million divided by, multiplied times 70%, and then divided by whatever number of months they tell you that you can use for that particular option, and that is their monthly income. So this is 90%. Now, 80%, which is going to be a better option as far as rates, like I always mention, since 90% is the maximum, but 80% is the more usual LTV, you're looking at 8.75 at par, and you're looking at your lowest cost option, 7.99. Not a very deep rate sheet there, so not a very high cost at all at 7.99. So very good option there, 80% LTV. Excuse me a second. And now our asset utilization investment, right? Investment is the 80% is the maximum LTV for asset utilization investment options. So here you have 8.25% with a little bit of a lender credit, and you can buy that down all the way to, wow, 6.75%. That's a very good option there. And then our asset utilization investment option, cash out, and you are looking at 80% LTV. Again, 80% LTV is the maximum LTV on the purchase for investment. And luckily for us, 80% LTV is also the maximum LTV for investment cash out. Very good rates there. We have 9.999 as your lowest cost option, and 7.874 as your lowest rate option. And let me give you a cash out, even though I mislabeled it as purchase. This is actually a cash out at 80% LTV. So you are looking at this is for primary, 80% LTV cash out, 7.99 is your lowest cost option, and 6.99 is your lowest rate option for your primary cash out loan using asset utilization for a 1-unit property. So very good options here for asset utilization loans. Again, remember on asset utilization, The borrower does not have to pledge the assets in order to be able to use them. He just has to prove that he has them. And after the deal closes, the assets are still theirs to do with as they wish, right? No need to keep them in any type of a segregated account or anything like that. So, looking forward to helping you all structure your asset utilization loans for both purchases and investment, uh, refis or cash outs. Excuse me, refis or purchases.
All right. Well, I don't see any questions here, but what an amazing program, right? To be able to, just literally give somebody a loan just based on their assets. So for the loan officers out there, if you have clients that have large amounts of money in their retirement or a 401k or just cash, remember this is always an option. It might not always be the cheapest option. You got to explore all the options, right? But if you do have somebody you're dealing with that has a lot of cash, that has a lot of money in the bank or retirement or whatever the case may be, I mean, this loan is always there, right, Jose?
Absolutely. And one thing that's pretty cool about this loan is that in some non QM options, you can actually use asset utilization to supplement the income of a W 2 borrower, or maybe they're self employed, using tax returns to qualify, but they have substantial assets. They can actually use that as additional income. So they could have two income streams on that same loan. They could have their traditional full doc income stream and then have the asset utilization income stream to supplement the income and hopefully put them over the top.
All right, great. Well, thank you everybody for tuning in. Remember, we do this at 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into a different topic. So we'll have a new topic tomorrow. Appreciate everybody tuning in. Thank you for the comments. Thank you, Jose. We will see everyone tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator.